Hello, everybody. Welcome to the technical analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As always, keep in mind that there's risk involved with each trade that you take. No one trade is guaranteed to profit. I think we all understand that. Obviously, there are potential profits with each trade, but we want to manage risk on the downside with each trade in a way that makes sense for us as well. And there are some nice tools within our WebTrader and AvaTrade Go app that assist with the risk management side of things to make it quite a bit easier. And we'll go through some of those tools when appropriate as we're going through some strategy ideas. And also keep in mind that what we cover is not meant to be financial advisement, but is coming from an educational perspective. Now, from our main website, we can log into the WebTrader, which allows you to trade on MT4 and MT5 accounts. And it's the same account if you log into the MetaTrader platforms or apps. You'll see the same trades. It's the same account, just with a more advanced user interface when you use our WebTrader in our app, where you'll see the advanced tools, some of which we're about to utilize within the session. And if you do trade from mobile, you can find our mobile app in the major app stores. You also can find links to those app stores here, and you go to the AvaTrade app. Just click the link in the menu, and you can download from Google Play and Apple App Store. And so the signals, the fundamental news that's coming in, the news feed, everything that we're going to go over within today's session and Thursday's session, where we go over more of the fundamental stuff, all of that is available in the app as well as the WebTrader. And so if we log in here from the main website, we'll be in the WebTrader. And you know, it's a technical session today, but I always say you should pay attention to the fundamental news to maybe give you an idea of which way you prefer to try and find an entry point once you start doing your technical analysis. Today's been not a big news day, really. The fundamental news has not been a big driver of movements so much today, and we've had a lot of good technical trends that have been quite tradable. There was a little bit of movement when there was an FOMC member out of the US that talked, some monetary policy stuff out of the European Union as well, a little bit that moved the euro in the European markets a hair. But not a highly volatile day, and really quite tradable if you found your price points and maybe some support and resistance levels that you trusted. I think what we'll do is we'll start out maybe with a mix of fundamental news with the technical analysis. And a good place to do that is if you go to our discovery section, which is found here, you can go to our Market Buzz feature. And we cover this feature in the fundamental analysis webinar as well, but we don't spend as much time on the technicals. What we could do is look at some quick trend analysis information that's found in this section, and I'll just give you an idea of how you could use the fundamental news with it. And we can pick really anything. Right now we're in the stocks. You can look at cryptocurrencies, standard currencies, commodities, indices, pretty much everything we offer, and see what kind of articles are out there on different instruments. And I can just randomly select something here. This is Microsoft. It looks like the trend analysis is negative. In terms of the price, it's expected that Microsoft might drop over 8% moving forward in the near term. We can look at articles to read to see if the fundamental news supports that. You know, we just see a quick article that came out an hour ago. Microsoft's Xbox division is shutting down for Bethesda Studios. Well, that doesn't sound necessarily good. And so you can start to click on these links, read the whole articles, find how you feel from a fundamental perspective with the recent news. You know, here's one about Apple working on their own AI data center chips. So you can get an idea of what's happening most recently with any instrument using this tool. And then you combine that with the trend analysis, and that can give you a good idea of, is the timing right to trade in the direction that you think the fundamental news supports. And right now, the prognosis from a technical perspective from Trading Central and the analysts over there is that they expect Microsoft to drop potentially 8 or more percent towards these price points, 379 to 371. And if we analyze the chart a little further, which we'll do in a moment, we might see that there are perhaps some support levels from the past down around these prices as to why they would say that might be where you could take profit if this does indeed drop. The other part of this signal is if this movement were to move above this blue line, which is referred to as the pivot point or the pivot line, then that then becomes an uptrend from a technical perspective, and they would say look for further upside. Then if it breaks above 410, you would expect maybe that it could carry up to 424, up to 432 even, where this resistance is seen on the candles. But currently, the signal is a downtrend if it doesn't break above 410. And they're looking around 379 to 371. So what we can do from this information is then take a look at the live movement and see what is happening with Microsoft right now. The U.S. market is open, so U.S. stocks are available to trade on. The movements are live, and so we can take a look, expand the chart a bit, and on the one-day candles, if I want to kind of draw a support and resistance level, I do see here an old support level where this was dropping, it hit and bounced on the one-day candles. It hesitated here, and then once it broke this price level, it plunged. Then as this came up in the past weeks, we see Microsoft hit this price point and drop, hit this price point and drop, and now here we are again, teetering around this price level, and it's trying to decide whether to stay above this price level. It just peaked above and pulled back, or will it pull back down? And it looks like it pushed back down already to 411. And remember, the signal was if it's headed down, it could head down to 379, 371, I believe was the price point. Now, if it was going to break above 410, 411, then the signal was to buy. But it looks like it's trying to pull back down below there. So if we go then to the smaller candles, let's say 2-hour candles, we can see that this indeed broke above the pivot line price that was shown in that signal. Again, if we go back to the market buzz and we go back to Microsoft, just to refresh those prices, this trend analysis, expecting an over 8% drop, said if it broke above 410, you'd look for further upside, okay? And so we go back to the live movement. Bring up the chart again, and we look at the 2-hour candles, and we're just above that price point. So it makes sense in my mind that it looks like it's pushing back down. We don't know for sure, will this continue to climb or will it drop? But that signal showed if it's down below 410, that the expectation was it could drop towards 479 or lower. And so what we can do is go back to the one-day candles. We can say, okay, if this drops below 410 again, which was that pivot point from the signal, then it establishes that downtrend signal again, okay? And if this goes above the resistance level that we saw on the one-day candles and breaks today's high, then we can look for further upside with that buy signal, which then had to take profit up towards 424 or so, okay, up in this direction. So currently it's in the middle. And so what we could look to do is a pending order. If this signal is true and it's going to drop 8% plus, then we can be patient and say if it drops below that pivot line of 410, then you could look to sell. So if it hits, say, 409.60, 409.50, then you could look to sell. And then if we go to larger candles, we can look down at that 479, which is this area down here. And on the larger candles, then we see, and I'll get rid of some of these lines because we don't need all of them. Okay, on the 1 week candles, we see that 479 range, why that would be a support level. Okay, you see the 1 week candles, resistance, 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 and then the breakthrough candle was here on this 1 week candle, breaking all of this resistance. So if this was going to drop significantly, the signal is saying maybe this would be a spot to take profit. Maybe it won't break this support level. So we could look at something above that at like 484, which would be above this wick right here. It wouldn't have to break any of this support level, old resistance level here, and that's a significant distance down. And so the setup then could be sell, but only execute if the price hits 409.50, let's say. So it establishes that downtrend below that pivot line. So we're using the pivot line from the signal and the directionality of that signal, but we're waiting with this setup to establish the downtrend again, because it certainly broke through that pivot line on the way up, but it also has pulled back down. Now, take profit, we were looking at 384 down here or so. That's above the support level. So not being greedy with the take profit. Stop loss, if it breaks below the pivot line of 310 and it's a true breakthrough and downtrend, then probably it shouldn't break back much above 410, or the trend was a false breakthrough at that point. So stop loss back up at, we could say 412, 415, 413, something like that. And you see the possible profit compared to the risk. A much better ratio than 50-50 or something like that. So we're looking at a much better potential profit than loss. So we can even be more patient with the stop loss, move it up to 415, and we're about 5-to-1 ratio here. Maybe a little less than that, but almost 5-to-1 potential profit to possible loss. With a setup like this, if you're right 1 out of 5 times or so, you're breaking even. And hopefully you can be right at least 50% of the time on a move like this, and you're making a really nice return in terms of the possible losses and what you end up with profit. Even 1 out of 3 is a nice profit on a move like this, okay? And so we're going in the direction of the signal. You obviously could look at it in the coming days. You could close it early if it's in a nice profit, even if it's not all the way down. Maybe it's 5%, 10% drop in the value of the stock, and it's approaching that 8% prediction or so, and you decide to close it early, that would be okay as well. And so that's set up. Because we tick the box, execute when price hits, it's a pending order, and it will be listed over here in the orders, not in the open trades. And so you see the trigger price listed, 409.50. If it hits that price, it will sell. Okay. Any questions on that setup or the thought process that I kind of simulated there? Okay, so I'll move on. We'll take a look maybe at another signal and see what else we could look at. Gold is a big item. I know that a lot of traders are interested in trading on. And so if we take a look here, expand the chart, maybe we'll go off the 1 week candles to go to something smaller. And what we see with gold is it's pretty responsive to fears of inflation. You know, there was a lot of talk about, could the U.S. lower interest rates multiple times this year? And you know, that had the USD weakening a bit and maybe made it a bit easier for gold to climb. It hit all-time highs, maybe in anticipation of the interest rate going down in the U.S. And you know, what happened since then is, you know, inflation didn't drop as fast as anticipated with the high interest rates. The U.S. raised interest rates 9, 10 times, something like that, in the past year plus, and you know, the markets are really waiting for signs that they can lower those rates back down. And the data coming in of late has been too strong to allow that to occur. And so the U.S. jobs numbers, the inflationary data, it's been too strong, too high. And so, for the time being, rates are not coming down in the U.S., anytime soon. Certainly not in the coming days and weeks, we don't think. And so what we're looking at then is a situation where the USD has remained a little bullish, a little bit strong, and that's why we see gold having creeped down a bit, okay? But as data comes in showing weaker data than expected, that helps to weaken the USD in anticipation of potential rate decreases, and that might help gold to bounce back up against something that could be weakening. And so as we look here, we do see on the one-day candles the pullback, but we also see a bottom kind of having been reached for the time being. And let me get rid of some of these old lines. And we see a bit of a support level here around 2280. And so I tested it here once and bounced twice, 3 times, 4 times, 5 one-day candles tested this price at 2280, and then we got the bounce here. Okay, and this bounce correlates with the jobs data out of the U.S., the non-farm payroll data recently, missing expectations, being a lot weaker than expected. And so this could help the gold maybe try and push back towards those all-time highs against the USD from a fundamental perspective. Okay, there's no guarantee of that, obviously, but the fundamentals are there to explain why this support level formed and why we got a nice bounce off of that support level. And the jobs data has kind of been the last part of the U.S. economy that's been holding on really strong and exceeding expectation, announcement after announcement, and finally there were some numbers that came in a lot worse than expected in terms of the jobs data. And so let's say fundamentally you think gold maybe might try to push back up with anticipation that maybe the U.S. data is starting to weaken enough to warrant an eventual rate decrease in the U.S., which could maybe weaken the U.S. dollar and push really what wouldn't be wanted, push inflation back up if rates go down too quick, if they make a mistake of lowering it too quickly. And so we're looking at resistance up here that's not the all-time high spikes that we see here on the wicks, but the more solid resistance where multiple days held, tested above, held, and then dropped. So without being too greedy, it looks like gold could, if it got on an uptrend, challenge 2400 without much trouble, if indeed it got on a bullish run up again. So from a technical perspective, I see resistance around 2400 and I see support around 2280. So if fundamentally you believe gold might have a reason to gain against the US dollar again, then this could be an opportunistic entry point. And so if we take that side of things, and I'm not saying you have to, but from a technical perspective, it looks nice. Then we might be looking at take profit around 23.95, just before that resistance up there. And a stop loss below the one-day candle support here would be around 22.75. Okay, and by the way, if you look at the signal on gold today, I believe it was a buy. We'll check that out in a moment. But let's go ahead and set this trade up, and then we'll look at what the Trading Central folks are predicting for gold right now. So stop loss, and by the way, I don't always agree, and our own technical analysis doesn't always agree with the signals from Trading Central, especially the fact that we're looking at one-day candles here. So this is maybe a multi-day move, and those signals are a lot of times are kind of intraday candles for shorter-term trading. But we'll take a look at the signal in a moment. So we're set up, take profit up here, just before the resistance, just before 2400, and stop loss down here at 2375 or so gets you below the one-day candle support. Okay, and so the ratio is nice, 2-to-1 approximately, potential profit to risk. And now I can adjust my trade size because I don't want to risk necessarily 15,000 on the trade. So this is where the risk management comes in. If I change this to one lot, I'm risking 3,800. And so I should have in mind, and you in general should have in mind, how much do you want to risk per trade? Okay, that last pending order I set up, I didn't really go through that. So let's go through that now. You know, if my balance right now, 62,000, 1% risk is around 620 or 630 per trade. And so maybe I want to risk 1%, or maybe you want to risk 0.5% or 2% per trade. But whatever that is, have that number in mind as you set up your trade. And so if I go half a lot, now I'm risking 1,900. If I go 0.15, now I'm risking less than 1%, less than 600. So I can go 0.18, and I can zero in on the amount that I'm comfortable risking per trade. Okay, and so as precise as you want to be, you adjust the trade size, and now I'm around 1% exposure on my possible loss to that stop loss. You see, I set the stop loss at take profit first, then I adjust the trade size for that technical setup to get the amount of risk I'm comfortable with. And you see my potential profit just under 1,300, my risk around 625, and then I go into the trade fully understanding my risk and potential profit based on the stop loss and take profit. The only part that's a little uncertain is the overnight interest. You're not sure how many nights you might hold this trade, how many trading days, but that tends to be a pretty insignificant number unless you're holding a trade for months or years. Okay, so that setup is there. From a technical perspective, it looks nice. It would have to break a pretty solid support level on the one-day candles for us to lose on this simulation, and it doesn't have to break the recent resistance level, and you can still take the profit without having to break that resistance, because we strategically set the take profit just below the resistance at 2,400 on the one-day candle. Any questions, comments on that strategy? And here's the signal on gold, by the way, which in the short term is a sell signal, but it actually almost already reached the take profit. Looks like that was a pretty solid short-term signal on gold, the sell signal, as it nearly reached the first take profit level already. It does look like it's trying to start to bounce, but we'll see in the short term. Maybe that signal comes to fruition. It's almost there, but that doesn't mean that the longer term move that we simulated up would be a bad idea. And a lot of times you can trade with a signal, an example like this, in the short term on a sell, and at the same time do a longer term move like this on a buy. Okay, I don't see any questions popping up. So let's take a look, maybe one more instrument. Does anyone have something they'd like to look at in particular? We could go maybe an index if we want to switch instrument classes again, or we could look at something different. Okay, crude oil. Crude oil works for me. And crude oil is an interesting one because there are so many things that can move the price of crude oil. Oh, I see GBP USD popped up. So let's look at crude oil real quick, and then we'll look at GBP USD. So the signal on crude oil is a sell. It looks like that already broke the pivot. And this is a good example of how you can use these signals with pending orders as well. So this original signal was a sell. The price was below this pivot line, and it was a sell signal. It almost hit the take profit, so it was a pretty good signal because it came in earlier in the day and it almost hit the take profit. Then something changed in the market and up went crude oil. And we see if you had a pending order above the pivot line, which what they tell you is if it breaks above the pivot, then it's a buy signal. a pending order above this pivot line would have kicked in when it broke above, and it already hit the first take profit on the buy. Okay, so a near profit on the sell signal, and if you closed it a little early, it would have been a profit. And if you put a pending order on the other side of the pivot line, that's what it's there for, to tell you if it breaks to the other side of the pivot, then the signal is to buy. It tells you right here, buy scenario. If it breaks above that pivot line, it says, then look for further upside. And that's exactly what happened. It broke above the pivot, and look at the momentum that it had. Okay, because this is a major resistance level, that's why they say if it breaks above there, it likely will continue to carry. And that's exactly what happened. And it's just below the first take profit, but it looks like it already hit and pulled back just a hair. Okay, so the situation we're at on crude oil is it's an uptrend now. Okay, now what could be driving that? And the reason I said it can be a bit complex, crude oil, is because crude oil can rise for different reasons pretty easily, and it can drop for different reasons. So one is supply and demand, right? If the economy is doing really well and there's a lot of demand for energy and the supply side is down, then you could see crude oil go up for that reason. Or the opposite. If economies are doing bad and sluggish and there's less demand for energy, we can see crude oil go down for that reason. So normal supply and demand situation obviously can move the price of crude oil. But then we can look at other things like supply disruptions from something like what's going on in the Middle East. Okay, you've got Israel moving into Rafah. You've got Iran involved with this whole thing with the Hamas group and Hezbollah. And it wasn't that long ago Iran was sending missiles towards Israel, and other nations were getting involved, and it became more of a regional conflict. And all of that can disrupt the shipping lanes, the ability for crude oil to get out globally. And so fear about the fact that things are rising up again, maybe in terms of the conflict between Israel and Hamas, that could be driving crude oil to bounce as well. Okay, from a technical perspective, what I see is a nice support level here on the one-day candles. Look at this line. This was drawn from a prior session, but it still holds true. Get rid of the lower ones because we're not down here anymore. Okay, this was the most recent support level on the one-day candles that bounced up and it never looked back. This is the drop, and look, when it got close to this price, look at the bounce. Okay, it got near this price and up it went. Okay, so if we're looking from a technical perspective, that's a nice support level. If we're looking from a fundamental perspective, there could be reason with fears in the Middle East why crude oil could go up as well. So if you feel like fundamentally it makes sense to buy here, and technically on the one-day candles, that's a nice bounce off of a support level. A longer term move here, and I call it longer term because we're not trading off of the 30-minute candles or the 1-hour candles. We're looking at one-day candles here. Would be to put a stop loss below the one-day candle support, which is down here, maybe 76.50, and a take profit near the first resistance level, maybe on the upside, which is up near 84, maybe up here. Okay, this is where it just dropped from not that long ago, less than 2 weeks ago. It's up here. So if this is going to gain some momentum, perhaps it gets up towards 84 again. And if you take profit at 83.50, it's before that resistance. Okay, so let's simulate that move. We'll risk manage that move. And so stop loss at 76.50. Take profit at 83.50. Okay, so possible profit, not quite double the risk, but better than the risk. It doesn't always have to be that way, by the way. But when we do technical analysis, it's nice to find opportunistic entry points. And what I mean by opportunistic is it's closer to the price level that you're going to move away from. In this case, it's closer to the support level that we're buying from and further from the resistance that we want to take profit at. Sometimes it's the opposite. It might be up here and you still think you should buy, even though it's further from the support level and closer to the take profit level, and you might be willing to risk more for a smaller profit. Okay, it's not an opportunistic setup, but sometimes you do that. In this case, it's an opportunistic setup. We're risking less than the potential profit, and it's in the direction maybe that the fundamentals tell you to trade as well. So from a technical perspective, it's nice to have an opportunistic entry point with a nice support level to buy from in this case that's not far away, and a resistance level that's further away that just had a rapid drop from it. And a lot of times when you have a rapid movement down, it's followed by a correction back up. Not always, but many times you see that. The faster something comes down from an overreaction in the market, many times you get a correction back up. So there are a few things technically that I see in this setup that are kind of in our favor. And then if the fundamentals are there as well, or at least neutral with the fundamentals, I think the fundamentals are leaning up more than down here, then it makes sense to make the move. But you have to decide that in your mind as well. So if I go one lot, now I adjust the trade size. We've got the exit points set up for stop loss and take profit. Now we adjust the trade size to be at the amount of risk and reward that we're looking for. And so again, I go down kind of in a stepwise fashion until I see a trade size that makes sense for me. That's around 600, so around 1% of my balance, going after nearly double of that. I could go a little bit bigger to be closer to 1%, and then I set my trade in motion, okay? And again, I'm not advocating your risk has to be 1%. It's whatever amount you're comfortable with. I'm just using that as an example of how a risk management plan might work. Then I could have 10 different trades going, and my overall exposure on my total portfolio still would only be 10% if I'm doing 1% exposure per trade. So this is a sort of setup that would be more conservative based, where you're not risking 10% on one move or something. But in the end, it's up to you how much you want to risk per trade, how many different trades you want running at once, etc. But as long as you understand how to calculate that using our tools, which makes it very simple to do, then you make the moves that make sense to you risk-wise. Okay, so there's crude oil, and we can take a look. There was a request for GBP USD. So let's take a look at that, and I think we'll be about out of time at that point. So we can look and see that there's a signal. The technical signal is to buy. Okay. It did break below the pivot level. You see here, it dipped below, almost hit the first take profit. So again, if you had a pending order below the pivot, it dropped and nearly gave you a profit on the secondary move. But now it looks like it is trying to bounce back up. And again, this sets up a situation where I would be looking at a pending order. Why would I put a pending order? Because it's still below the pivot level. So a pending order up here, above the pivot line, if it breaks back above, it establishes the buy signal again. Remember, it's a buy signal only if it's above the pivot line. That's what it tells you. Long positions, as long as it's above 125.25. So even though the signal went bad the first time it said buy, clearly it went bad, it dropped below the pivot. I still trust the technical analysis from Trading Central. This is a support/resistance level here. So if it breaks back above this line, 125.25, it looks like that would establish an uptrend, okay? So, and the downtrend signal almost already came to fruition and bounced back up. So it's a little late on that one. So if we go 1 hour candles, we take a look, 125.25, we'll draw a line there. 125.25 is right about, okay, there. So let's get rid of these other lines. Okay, so what I'm looking at here is the USD had bad jobs numbers last week. There's reason for the US to be weaker now because that was the major obstacle before the U.S. monetary policy decision makers said they need to see the labor market not so tight, meaning they wanted it to weaken before they could maybe lower rates. And now that has happened, maybe there's anticipation that there could be a rate decrease in the U.S. sometime this year, maybe even more than one. So there's a fundamental reason why the USD could give up ground to the pound. And now we have a technical signal that says if it goes above this price, that you could buy going towards these prices up here. So this, to me, is a situation where I would set up a pending order. So execute when price hits. If it goes above this little support level / resistance level, we see here it was support, went up. Hit that same price, went up. Broke below that support, but seems to be bouncing right back up. If it goes back above there, I feel like it's above that resistance / support. If it hits, say, 125.35, I feel like it's back to an uptrend. You might see it differently. Maybe you want to see it go a little higher before you're convinced it's an uptrend. That pivot level is at 125.25, so 125.35 is 10 pips above that. In my mind, that reestablishes that signal pretty solid. And then I might take profit at either this resistance level or the next one that I see on the chart in the 1 hour candles. Resistance here and down, it breaks above there. I see this wick hit resistance here and came down. Okay, it's a shorter term move. I'm not even leaving the 1 hour candles. Okay, so pending order, if it hits 125.35, then is the spot I drew my line. Then I'm looking to buy because it establishes an uptrend on that signal from Trading Central. My stop loss then is back down a certain distance. I would want to get back below this pivot line. So maybe 125.20. It's about 15 pips to my stop loss. $125.20. Okay, and my take profit, I was drawing lines up here, either 125.92 or 126.29. Let's go with the first one. First off, anyways, we could take a look at the second if we want. So 125.92 is just before this resistance. So take profit, 125.92. And so I actually, that ratio is nice. It's better than 3 to 1, almost 4 to 1 potential profit compared to risk. I don't need to go necessarily to this next level up with resistance. This first one feels okay to me. It was here just last week, or I'm sorry, just earlier this week. And it doesn't even have to break this week's high to hit our take profit at this spot. Okay, so that's a spot where you're not being greedy. It's realistic. It could get there. It was there just yesterday, and so we're willing to take profit just before this week's high at 129.92 with this simulation. So now I just need to adjust my trade size for these exit points so that I'm risking the amount I'm comfortable with. So again, I come up. If I do 5 lots, I'm risking 750. You see the lot size is much bigger because it's a short-term trade. I don't have much distance to my stop loss. It's only 15 pips. So I'm going 4 1/4 lots maybe, gets me about 1% risk, okay? And my potential profit is well over 2,000, 2,422, okay? So again, this is a pending order. So we have 2 orders waiting maybe to activate, and we have 2 trades that are already running, one already in profit and the other trying to get there, and we'll see how those carry out. Maybe you've simulated these yourself on a demo, or maybe you decided to trade on your live account. That's up to you, but we'll see how these carry out. I'll have it run here on my account, and maybe in the next session we'll take a look how they ended up. Any questions, comments before we end things this evening? Alexander, I don't have any examples for microcomputers. we did look at Microsoft stock, if that's close enough for you. But I don't have anything in particular on that topic right now. All right, I don't see any other questions popping up. So thank you all for attending. Thank you for the questions and the participation. It's nice to have some communication back and forth during the session. All of the sessions are recorded, so you can go back and watch on our YouTube channel by tomorrow. This session should be uploaded and go through and look at some of what we did and some of the tools we used. Again, these sessions are not about you mimicking the exact trades necessarily, but it's really learning how to use the tools and build your strategies around the tools that we have on our platform for the signals, the trend analysis from Trading Central, the fundamental news tools as well, to build your strategies with real information. And that's what these tools and these simulations are for, to help you get a handle on how to do that on our web trader and in our app. All right, thank you all for joining, and good luck with your trading the rest of the week. Bye for now.